Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. This morning we'll be taking a look at exciting stock market news, notable earnings reports including a big surprise miss from Target, and which stocks are this morning's biggest gainers and losers. Don't forget you can now sign up for TipRanks Premium on a monthly basis, so head over to tipranks.com to unlock some fantastic research tools. Now let's get right into this morning's exciting stock market news. U.S. stock futures are currently in the red this morning. Right now, the Dow futures are down 0.6%, S&P 500 futures down 0.8%, while Nasdaq futures are down 0.95%. President Biden has signed the Inflation Reduction Act into law. The $430 billion package is expected to help reduce the country's deficit over the next decade. It includes $360+ billion for climate and energy policies and a 15% minimum corporate tax rate for companies that earn over $1 billion. Elon Musk is at it again on Twitter, this time joking about purchasing Manchester United. Late last night, just after 8 o'clock p.m., following after-hours trading closing, Musk tweeted, "Also, I'm buying Manchester United. You're welcome." About 5 hours later, he did clear it up that this is a long-running joke on Twitter and that he's not buying any sports team. But of course, the market still had a chance to react this morning. The Manchester United stock is now up over 5%, but when pre-market trading opened this morning, it was up as much as 17%. We'll see if the SEC has any feelings towards Musk's Twitter joke. Shares of Carnival Cruise Line were on the rise after the company announced they were easing COVID-19 restrictions. This led to a surge in new bookings. On Friday, the company announced that vaccinated guests do not need to provide a COVID-19 test, while unvaccinated guests will not need to go through an exemption request process. They said that booking activity this Monday nearly doubled the level observed on the same day in 2019. The president said that our guests are booking the remaining of 2022 inventory and getting a head start on planning for 2023. The Carnival Cruise Line stock is currently rated a hold with an average upside of 18%. And Stellantis car company Dodge announced that they are retiring their Charger and Challenger models. Their first fully electric vehicle launch will be a crossover called the Hornet. There will be one final lineup of the gas-fueled Charger and Challenger muscle cars for 2023 that will carry a commemorative last call underhood plaque. Stellantis said that they will launch the world's first full battery electric muscle car in 2024 as well. Their first EV to launch will be the plug-in hybrid crossover called the Hornet, which is a name resurrected from their 1970s station wagon. It'll be an entry-level vehicle with a price starting at less than $30,000. Analysts rate the Stellantis stock a moderate buy with an average upside of 48%. Now moving over to notable earnings reports. The big surprise in the pre-market this morning is Target, who widely missed analyst expectations on earnings as they had to slash prices to get rid of excess inventory. The company has maintained their outlook for the year, however, saying that if we hadn't dealt with our excess inventory head-on, we could have avoided some short-term pain on the profit line, but that would have hampered our longer-term potential. Target reported earnings per share of 39 cents, well off of the 72 cents expected by analysts. This was on revenue of $26.04 billion, which was in line with expectations. Analysts currently rate the Target stock a moderate buy with an average upside of 2.5%, though I'm sure we'll see plenty of price targets being reiterated following this report. We then heard from Lowe's. They reported mixed results, citing lower demand for some discretionary items. The company said that improved operations offset lower than expected sales that were hurt by a shortened spring. They reported earnings per share of $4.67, ahead of the $4.58 expected, while revenue came in at $27.48 billion, shy of the $28.12 billion expected. Analysts currently rate their stock a moderate buy with an average upside of over 6%. And missing on both earnings and revenue estimates, we had Zim Integrated Shipping. They fell short of analyst expectations despite revenue growing nearly 44% year over year. They reported earnings per share of $11.07, shy at the estimates of $12.16 per share. That was on revenue of $3.4 billion, slightly missing the expectations of $3.6 billion. They are continuing to expect the same adjusted EBITDA of $7.8 to $8.2 billion for the full year. With no recent analyst ratings, the stock is currently rated a moderate sell with a slight downside of 0.9%. In the after hours today, we'll be hearing from Cisco Systems, Bath & Body Works, and Synopsys. Now, let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by the Sport Radar Group after they lifted their future guidance. Trading under the ticker SRAD, the stock is up over 8%. They're followed by Agilent under the ticker A, up 5.67%, and Essential Properties Realty under EPRT, up 5.66%. Our biggest losers this morning are led by Blueprint Medicines. They are falling after releasing positive top-line results from one of their studies, so I feel like I may be missing something here. But under the ticker BPMC, the stock is currently down nearly 17%. They're followed by Krispy Kreme under the ticker DMUT, down 12%, and Sibanye-Stillwater under SBSW, down 7.8%. So that is going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.